Hey guys, I hope you're all doing well. Welcome back to a new video. Now this one, I'm going to be going over a poll that I ran over in my Discord, and I pretty much just asked what's the biggest challenge you face as a trader right now. Number one was to stick to my trading strategy or trading plan. Number two was overtrading, or aka revenge trading. And number three was managing risk properly. Number four, staying patient and waiting for setups. Number five was emotional control, so like fear, FOMO, and greed, etc. Right? And it seemed like quite a common one was staying patient, waiting for setups, and obviously emotional control. But in this video, I'm going to be diving into ways that you can overcome this, and pretty much practices that you can put into place as well to obviously help avoid all of this. So first things first, number one, sticking to my trading plan. Now my advice to you would be, number one is to print your plan out or keep it visible on your screen, and you need to make it real. You know, make it a plan that's working. For example, the ZCFX V1 strategy that we use, that's a working, profitable trading system. Okay, so write a clear plan out and keep it visible to yourself at all times, whether that's printed out or on your screen on Notion. Right. Number two is to use a checklist before each trade to confirm it fits your plan. Eventually it becomes second nature and you don't need it. So this is more suited to if you're in the early stages of learning our system, for example. But always have a little bit of a checklist, like a bit of a, an order flow roadmap that you can follow, to just have in front of you at all times, that you can, follow at all times. This will just definitely help if for example, is the trend bearish or, bullish, for example. Let's say trend bearish, yes, okay. Is price inside of a bearish range on all time frames? Yes. Is price inside of your point of interest on the H4? Yes. Has M15 shifted bearish? No. No trade. Okay. Simple things like that you can follow. A roadmap, right? Keep it a flow chart. Flow chart would be better to name it. So little things like that you can do. Okay. But eventually it does become second nature. I don't personally have a checklist nowadays, just because, like I said, it's second nature. I have an edge in the market. My edge is feeling. Okay. Next up is journal every trade and note why you did or didn't follow the plan. Accountability helps. This is just a no-brainer. Make sure you obviously journal every single trade and note why you did and didn't follow the plan. You can journal missed trades as well, but eventually you can go ahead and review those journals, whether it's your missed trades or the trades you've taken, and you can notice a pattern within the journal. For example, you're probably better on the long side, you have a higher win rate on the long side. You may be better in London or New York session. You may be better trading this or that pair, or you may be better trading on these or that day, so things like that you can track note of and obviously become better at. Next one is, if you find yourself deviating often, your plan might be unrealistic. Adjust it, don't abandon it. This is the key word, is to adjust it, don't abandon it. The reason I say that is because a lot of people have a system in place. They'll take a couple of losses here and there. They'll abandon their system and go into something new. Trading is not like that. Okay, you need to just adjust a working system. For example, if you're learning the ZCFX V1 strategy, especially if you're learning it using our free content, don't abandon it after a few losses. Adjust it, no matter the way you trade, because no matter way you trade, besides getting lucky, if you're learning it, you are going to lose at first. Obviously, the people who master it and succeed are the ones that stay the due course, right? Next up, number two, is we have overtrading or revenge trading. Okay, my number one advice for this would be, this isn't in any order, by the way, I'm just going from 1 to 4 or 5 depending on how many advice I've given. But for example, overtrading or revenge trading, to avoid this, you want to set a max trades per day rule. For example, 3 quality serves and you're done. Okay, simple rules like this in place will definitely help. Number two would be to walk away after a loss, even just for 10-15 minutes, to avoid emotional spirals. Because again, if you take a loss, for example, price is chopped bullish off your point of interest, you're looking to buy, unfortunately it's been a loss, which sometimes it just generally happens, and you may jump back into the trade after any signs of bullishness on the bullish candle, for example, right? Sometimes this may be good, don't get me wrong, you may get back into it, you may just be a little bit early, fair enough. That's more suited for a seasoned trader. If you're a beginner and you struggle with these emotional things in place, maybe you want to just walk away from the charts and take a little break. There's no harm in that. The markets will be there tomorrow. Okay, I'll jump into that shortly. Next up is to use alerts instead of watching the charts all day. Boredom breeds overtrading. You don't need to be sat there staring at the charts all day. I get it, don't get me wrong, we're traders. If we're not trading, we feel unproductive. Okay, I get that. But at the end of the day, a lot of the way you think with trading is actually you need to think, you know, the opposite. You know, switch the roles or reverse them. Okay. So you know, you don't need to watch the charts all day. Just set your alerts at your points of interest where you want to be trading from, and then just go about your day. It's as simple as that. Okay. And you can use this time to be doing other stuff, which I'll jump into shortly. Okay. But remember, boredom breeds overtrading. Next up is ask yourself, would I take this trade if I were up today? If not, it's revenge, not your strategy. Okay. So you always want to ask yourself, maybe before you take a trade, is would I take this setup if I was already up positive today? Number 3, managing risk properly. These are just some general tips when it comes to managing your risk. Okay. Now, obviously, risk management, there's many different ways to approach it. It could be trade management, money management, and obviously just the general risk side of things. But trade management is very important, just in general. But risk management probably is as a whole one of the most important things, alongside obviously psychology, because you can turn pretty much any system to profitable. You know, if you have really good risk management, if that's your edge, right? So number 1 would be to always define your stop losses and position size before entering. Very basic, very simple, but it's just a good reminder. Number 2 would be to never risk more than 1% of your account on a single trade, or 2%, whatever, but just never exceed risking more than that on a single trade. For example, if you have you know, a 0.5% risk, and let's say, you know, a 10% drawdown on let's say a funded prop firm, that means that you have 20 trades to trade before hitting that drawdown limit. Whereas if you risk 1%, you only have 10 trades. If you risk 2%, do the maths, right? So obviously risking less is kind of better, but obviously not always the better. So you don't want to be risking 0.10%, for example, because it'll take a while to pass the challenge if you are doing a prop firm. Obviously you have a bit more flexibility on your trading the capital, but if you are trading personal capital, it is always better, even on a prop firm as well, it's always better to be trading the principal of the balance rather than the initial balance. So for example, if you put $10,000 into a trading account, it's better to be trading with the profits that you make from the $10,000 rather than the initial $10,000. Okay, and obviously anything above the $10,000 is profit and money to you. So if you get to 10,500, it's better to be playing around with essentially that that $500. Obviously not in one single trade, but you get the idea, right? Because as long as you're still keeping that initial balance, that's all that matters. But yeah, 1% of your account is just a general rule, because again, like I said, if you have an overall drawdown of 10%, then obviously you have 10 trades. Okay, 2%, 5 trades, 0.5%, 20 trades, right? Do the maths. Okay. Use a risk to reward ratio of at least 1 to 2. Take partials, don't take trades that you don't justify the risk. Okay, this is kind of an optional one. It doesn't matter if you're trading 1-to-1 as long as you have a higher win rate. Okay, obviously if you know the stats of your system, great. High win rate, 1-to-1, perfect, right? But generally, a rule of thumb, especially what we do at ZCFX, is it is usually a minimum of a 1 to 2, where we usually take partials and let the rest run by managing the structure. Okay, next up we have, I don't know what's going on there. Think in probabilities, not certainties. You can lose and still win long term. Okay, a lot of people have a very short term mindset in trading. Okay, you just need to adopt the long term mindset. It's easier said than done, but you really need to. Okay, you can have a bad day but still a profitable week. You can have a bad week but still a profitable month, and hell, you can even have a bad month but still a profitable year. This stuff does happen. Okay, thinking sample sizes as well would be another one I haven't really put on here, but it kind of correlates as of obviously you can still lose and win long term, but thinking sample sizes of at least 20 trades rather than the next trade and the next trade, and thinking of an individual trade outcome. Thinking a sample size of at least 20 before you even start questioning any trades. Okay, it just helps develop the long-term mindset. So always think of probabilities, not certainties, because there's no certainty in the market. The market, if anything, is uncertain. Number 4 would be, not number 4 would be, but number 4 is staying patient and wait for setups. And this is quite a common one, a common vote that a lot of people put. A lot of this would be obviously looking at other people's analysis and getting FOMO into the trade, because you're, for example, if let's say someone's just posted in the P&L chat and said, I just took this 3% win on EU, you'll then be doubting yourself and maybe thinking, should I have taken that too? Okay, when in reality, you probably shouldn't have been taking that trade because you didn't take it for a reason, obviously, right? Yeah, you can learn from it, don't get me wrong, especially if you're in the learning phase. But if you're more of a seasoned trader, you have a system in place that's profitable, but you get influenced by other people's setups, that's on you. That's something you need to get rid of, okay? Everyone's their own trader. A lot of people, if anything, on social media is fake as well, okay? What you see, for example, on social media of a guy, living a life in Miami, or Dubai, he's a 7-figure trader, he's always flexing his P&L. I guarantee you 99% of those people are fake. That's just social media for you. It's brainwashing you. Anyway, staying patient, wait for setups. Number 1 would be to mark your key POIs before the market opens and just wait for price to come to you. Don't chase. Again, set alerts and go about your day. Number 2 would be to have a watch list, not an open buffet. So this is something I like to say quite often. So you just want to focus on a few high quality setups rather than, for example, all the different pairs in your watch list. Just have a few pairs on there and just focus on, obviously dial down in on the, for example, if you've got your dollar, BTUSD, NQ, ES, or NASDAQ, S&P, whatever on your watch list, maybe just mark up the charts for that day or that week, and whichever is looking the most cleanest to you, just dial in on those pairs or that asset that you're trading or anticipating to trade, and just focus on that only. Okay, remember, only focus on a few high quality steps. You only need a few high quality steps within a month to be profitable. Another one would be to remind yourself no trade is not a bad trade, right? Well, no trade over a bad trade, pretty much. So you don't need to take a trade if it's a bad setup. If it's a low probability setup, don't get me wrong, you may take it or reduce risk, but you don't need to trade it. Okay, you don't need to trade it. Even if it works out, so what? There's always going to be another trading opportunity. Remember, capital preservation is just part of the job, and it's the absolute key when it comes to trading. You want to be, if anything, rather than focusing on making money, you want to focus on protecting the money that you have, okay, and obviously scaling your account, aka compound interest. Next one would be to use that waiting time to review old trades or study. Productive patience beats anxious waiting. So always, once you're waiting for price to come to your points of interest, if you don't want to go out and have alerts, okay, use that time to review your journal. Talking, for example, if you're my student of mine, talk in the Discord, talk to me, just do something, okay? Productive patience beats anxious waiting. So don't be waiting, okay? Don't be chasing price anxiously. Be doing something productive in the meantime. Number 5, emotional control. So things like FOMO, fear, greed. There's obviously a lot of other things out there, but these are the main ones. So obviously one thing you can do is to limit screen time when the markets are volatile. Alerts over constant watching, okay? You may be FOMO'd into a position based on a huge kind of bullish candle forming or a huge bearish candle forming. But again, always obviously wait for the closure, right? But you're going to be FOMO'd into that once you've seen it play out. But remember, just set your alerts. You don't need to constantly watch the charts, because if you watch the charts, for example, if you take a look at my journal, sometimes I'll show the community my journal. The days that I'm sat most on the charts are the days that I take most trades. Now, don't get me wrong, I have really great emotional control. My edge is, I have a really good edge in the market. I'm not trying to be egotistical here, but I am going to be a top trader. All right, that's my goal. I'm obsessed with trading. I'm not just a social media trader that you've seen, spawn out the last couple of years to make good content. I'm genuinely an obsessed trader. I love trading in a positive way, right? I know exactly what I'm doing. I know exactly when to get in. I know exactly when to get out. I know exactly when to sit my hands. All right, key things, okay? I have an edge in the market that I've developed over the past 9 years of trading, right? But I'm just saying, on the days that I spend more on the charts, I take more trades. Even though I end the day positive, I take more trades, And sometimes, a lot of the time, those days that I'm taking more trades isn't as profitable in terms of the P&L percentage compared to the days that I'm taking less trades. Next one would be to predefine your entry, stop, and TP levels, okay, and stick to them. So you want to know where you want to get in the market, you want to get out, and you also want to get out in terms of taking profits. Those are the 2 key things you want to know: when you want to get in, and where you also want to get out as well, okay, and stick to that. If you're in a trade and price is running profit, yeah, take partials and manage the trade with structure. But the minute you start adjusting your stop loss or adjusting your TP, that's just greed kicking in. Okay, you don't need to adjust it. You've obviously entered the trade with that area that you're anticipating of entering, opening and closing the trade. So stick to that. Next one would be to log your emotion before and after the trades in your journal, and you'll see patterns if you do this. By logging your emotions before and after your trades, I'm just thinking in terms of, like, example, How are you feeling? Okay, are you feeling confident, maybe a bit overconfident? Are you feeling sad, happy? And just general other things, like you can have a score of 1 to 10, for example, on how you feel about the setup, for example, and you'll notice patterns. And you know, be honest with yourself, be realistic, be pragmatic, right? Just log your emotion before and after the trades in your journal, okay? And you will see patterns if you review them, just like your journal, right? Next up is to use smaller size when emotions are high, or take a break entirely. Okay, size up over time. Excuse me, I didn't mean to skip there. Size up over time. So, for example, if you're lacking a bit of confidence, just use a smaller size, even just when your emotions are high. If you feel like FOMO or fear or greed's kicking in, you feel like you're revenge trading, just use a smaller size, 0.01 lot. You don't need to risk the whole percentage. Just be strict with yourself, because remember, at the end of the day, guys, the more undisciplined yourself, you know, with yourself you are, or the more you're rushing into a trade, or the more you're chasing the money, the more it's going to keep running away from you, but also that the more you're setting yourself back. That's just the reality, guys. So keep that in mind. So just take a break entirely, okay? Or if you start the day negative, it may, if you're a beginner trader, to just stop trading for the day, right? And just spend the rest of the day reviewing the trades and just back testing, putting in some other work, maybe forward testing, okay? You don't need to overcomplicate trading, but people do, because, well, we're humans at the end of the day. We have emotions, right? We're not robots, but we tend to overcomplicate it. So like I said, again, if you lack confidence as well, size up over time, okay? If you're going into a live market environment after being on a demo account for so long, maybe you want to get into live market or whatever, for whatever reason. Doesn't matter if you've been on a demo or not, but maybe what you should do if you lack confidence in executing trades is enter trades with a 0.01 lot size. That way you can build it up over time. As simple as that, okay? You can risk more over time, because obviously you'll have more confidence once you see the P&L floating in profit, okay? Build it up slowly. You don't need to jump from risking 0.10% to 0.5% to 1%. Okay, maybe that's a bit unrealistic, but maybe from, for example, 0.10% or 0.05%, depends on obviously your P&L and obviously how much risk you can risk. Because if you're trading micro lots, it's, you know, not very reasonable. But for example, if you're going from trading, for example, you know, average 0.10 lots to then trading 5 lots, that's a bit of a big jump. So you don't need to do that. Just jump on from 0.10 to maybe 0.3 to 0.7, or you know, to 0.8 to 1. Build it up slowly. You don't need to rush it. Again, like I said earlier, the more you rush greatness, the more you're setting yourself back. You can't rush greatness, guys. It comes with due time. Next would be to remind yourself, okay, the market will be here tomorrow. And remember, FOMO usually leads to losses. It will. Don't get me wrong, you may get lucky, but you can't have this mindset in trading, guys, because you are just going to set yourself back. The more FOMO you are in the market, so FOMO is just fear of missing out, that will lead to losses, okay? Focus on high probability steps. That's all you need to do, okay? Remember, the market will be here tomorrow. Print that out. Write it down somewhere. Stick it to your bloody forehead with a staple, right? Just remind yourself at all times the market will be there tomorrow. But guys, those are the 5 things in terms of sticking to your trading plan, overtrading, revenge trading, managing risk properly, staying patient, waiting for setups, emotional control, so things like FOMO, fear, greed, confidence, okay? Those things are little practices and advice that I'd give you, or my opinions at least. Obviously take it with a pinch of salt, but those are my opinions that you should take into mind or consideration. If you've enjoyed this video, guys, make sure you hit the like button, subscribe for more, and let me know in the comments what you struggle with, and I'll be more than happy to reply. And just let me know the general thoughts of this video if you like this style. But guys, take care. Thanks so much for watching. See you soon.